But thank you very much, ladies and gentlemen, for making out time to be a part of this. Just so we kick off on a right note, there's been so much that has been said already about InsurTech, digitization, the future of what insurance would look like in Nigeria. I have also looked at it from a global view. The InsurTech industry, for example, in 2024, raked in about 15 billion in premiums, and it is expected to reach about $100 billion in premiums in another 10 years from now. If you look at the African market, very exciting and very interesting market as well. We are starting to see the revenues in terms of investment deals. I think in 2023 it was about $30 billion. It was slightly lower than what we had in 2022. But the interesting part of it is that we also see an increase in the quantum of investment deals. I think in 2023 we had 17 investment deals in InsurTech across Africa. And this, for me, basically speaks to a widening field of innovators. We've heard the likes of Deji and a few others speak about what potentially is possible. And so this afternoon, we will be deep diving into the Nigerian market. Unfortunately, I think Deji is probably the first InsurTech that has given the closest insight into what is happening within the InsurTech space in terms of performance in the industry, and kudos to CubeCover for that. If you look at Nigeria, baseline insurance penetration is still at 0.34% of GDP. We saw in 2023 the first time the insurance industry crossed the 1 trillion naira mark, and we are expecting, given the trajectory that we've seen, that this year, in fact, I think a couple of days ago, I'm not sure if it was Nairametrics or some that carried the Q1 figures for the insurance industry, it put it at about almost 800 billion naira. That means if you extrapolate that and assume that we're doing exactly the same thing, then we're setting ourselves up for about a 3.3 trillion naira industry in terms of revenue. And that, I think, is a huge milestone. So this afternoon, we will be speaking to both the achievements within the InsurTech space and the gaps that exist. How is InsurTech transforming the insurance value chain? How is regulation enabling or constraining progress? And then we would look at the path to sustainable scale and what this path would look like. So once again, thank you very much, ladies and gentlemen. I will start with Deji. Very first question. We often talk about success in InsurTech in diverse forms. Some people look at it from the angle of penetration. Some look at it from trust. Others think it's about affordability. And to some other people, you think about inclusion. The question I want to ask Deji today is, what do you think should count as a metric for success? Which of these should actually be the metric for success if you're looking at the InsurTech industry as a whole in Nigeria today?
It's loud enough. Yeah. Thank you for that question. I think that success from the InsurTech perspective has multiple metrics. Yes, the metric of penetration is very valuable. The metric of inclusion is very valuable. The metric of even claims, because you can do technology to sell, but you also want to see that it's being utilized in terms of claims, is very valuable. But I think overall, absolutely, what I would measure at success when you combine all those things is standardization. What do I mean by standardization? It means that if you look at the NIRA Act, if you look at the new InsurTech guideline, everyone is driving towards the digital experience, right? If you are able to create a standardized environment where things start digital first, then we start to talk about success, right? So let me even use a commercial example. I met a company, an insurer that was complaining about, the cost of providers are going up because of inflation. And I said, okay, Do you know that if we move 30% of your customers that are claiming, this was a health insurance, to not go to the hospital, if we treat them from the digital angle, we can bring down your cost, right? And you can create more value. So for us, overall, when you combine penetration, A, B, C, D, and G, if we can use digital as the new standard, where everything now is digital first, knowing very well that other players in other industries are already digital first, then I will say that that's the proper position for measuring success.
Excellent. So what I take away from Deji is standardization. And I think that also talks not only to the scale of economics, but also the fact that you can bring the prices significantly lower. So still on that same question and in that same thought, so we've been able to establish that the more we standardize things, the easier it is for us to have more generic products, more people to be able to latch onto it. I would want to go on to Uche. And you know, every time I see Uche is FastClaims. So maybe this question really should come to you. Which areas within the value chain, so you talk about distribution, claims automation, or product innovation, have you seen the most precise results as far as insurtechs are concerned in Nigeria so far?
Okay, thank you very much. So I think there have been a lot in terms of distribution. But if we really need to look at insurance, that distribution is where we're selling a promissory note. An insurance policy is a promissory note. When an insured sees a value proposition in insurance, it's not just you paying claims, but how you handle the claims. We sit down here today, we say we have customer experience in the bank. So what do we mean by customer experience in the bank? It's not because of you deposit your money in the bank. It's because the bank has provided channels for you that you can use an app to pay for your DSTV, make transfers, literally do anything. And that is why you say you have customer experience. So we should begin to ask ourselves, where is the customer experience when it comes to policyholders? It's not just in the distribution. It comes in how we handle claims. There are customers that insurance company pays claims and they end up moving to another insurance company. What happened? There was no customer experience. So that is one place that we really need to look at and create a customer, put more attention to it, in as much as there has been more value proposition in the distribution. And that is where we're looking at where we can have seamless claims payment from the time you report, from AI doing inspection, picking damage detection, you being able to sit at the back end, and also as the AI is picking the damage detection, you are able to also highlight from the damages, let the underwriter have a repair estimate, and ultimately automate and issue a DV. So this is area we need to, because that is where the trust factor is. And that is one place that when we get it right, then we'll begin to talk about penetration increasing. Thank you.
Great. Thank you very much. So what I hear you say is distribution has shown the fastest growth trajectory. However, we need to match that with the experience that comes through claims, because it's at the claim point that you're able to get that experience that you want to say is either good or bad, and that's what the word of mouth would typically be as you progress. Let me move to Nkiru. So we've had several insurtechs try different things in the market. They've also tried to pretty much address different customer segments. Now, do you think, from a measuring impact standpoint, do you think that insurtechs have expanded access to the mass market or to the informal sector? Or do you think that adoption is still skewed towards the urban and middle class demographics?
Thank you so much for that question. I think that adoption is still very uneven. If you ask me, the urban and the, mid-class level customers are adopting faster. However, what we've seen is that with the mobile-first models, you are now beginning to see a shift for the rural, customers or consumers to start to, adopt. But we're still a far cry from what it should be. I think that scale will really come when the rural guys see insurance as part of their everyday daily risk. And so it's not just that they're buying it because they're advertising a product to them, but because they understand the risk that they are faced with every day and then they can buy. So I think it's still quite uneven.
Great, thank you. So what I hear you say is there is still a lot of work that needs to be done at the mass market or informal segment sector. We're seeing a lot more adoption coming through from the mid class to upper class, maybe because of affordability or also financial literacy, as the case may be. Omoshola, let me come to you from a customer perspective, because I think that really would tie into what we've just, the submission from Nkiruka. If you look at the customer's perspective, would you say insurance today is easier? Will you say it's faster? Or will you say it is more transparent when you look at it vis-a-vis the enabling environment created by digital tools? How would you, define that?
Thank you. So I think I would say there's a little more optimism right now, amongst informed and educated buyers, right? Definitely with the advent and the expansion of insurtechs, right? Clearly, as you can see, a lot of demos were made today. Kudos to Deji here and CubeCover team, right? They've done a lot, right, in simplifying and demystifying a lot of things. So insurance in itself, people don't understand it, right? A lot of people don't understand it. So making it simple, embedding it in the lifestyle of people is really the way to go. And for us, right, one of the measures, right, so I have to speak about the measures, right, so that I can drive home my point. One of the measures, from our perspective, I think they just spoke from the insurtech perspective. I'm speaking from the insurer's perspective because while the insurers are basically, so the insurers are basically have, they carry the risk and they have the back-end platforms, while the insurtechs basically have the client-facing platforms. For us, what we're looking at are basically two things in terms of measurement of success, which is creating new markets, your ability to create new markets as an insurtech, right? And enhancing existing verticals within the insurance space, right? If you look at those two things, they are basically pointers to what insurtechs then need to help the entire industry to achieve. And they've been doing that. So I would say, yes, there's some optimism. We're not there yet. Yet insurance is definitely, and everybody is working towards it. There are a lot of products now that are definitely accessible via mobile-first methodologies, right? Very straight-through processing, and you can get your insurance up and running, very quickly. So yes, there's some optimism. We have a long way to go in terms of the reach, in terms of the distribution. But yes, insurance is a lot simpler these days. Thanks.
Great. So, just piggybacking on that question, I remember that somebody asked a question in the audience about why do we use the word disruption? It always sounds very big and sometimes annoying because it feels like every other person doesn't know what they're doing, right? So, I'm going to stay on you, Omoshola, because you also hit home a point. Apart from yourself, I'm also a traditional insurer, even though I have insurtech experience. Would you say insurtechs are disrupting the market, or are they complementing traditional insurers by helping them to go the way of digital? How would you slice and dice that?
All right, great question. Okay, so this is my perspective, right? It may differ from other perspectives, right? So I think everybody has a role to play. right? Traditional insurers exist primarily, right, as risk managers, right? They carry the risk, and that's their primary function, right? Of course, reach is something that, distribution is something that we need to have at the back of your mind if you really want to expand and grow, right? I think if you look at NICOMs, the regulator, their foray into policy expansion, right, to capture InsurTech into the net, is also a recognition of the fact that we need these guys now, right, to complement what we're trying to do. You understand, right? If not, the regulators will not be open to all that. And they've done that with the NERA conversation, expanding regulatory, recapitalization so that the back-end players are strong enough and trusted enough by the InsurTechs, because that's always been an issue, right? And of course, all the other things that have been done, right? So I think if you look at the direction of the regulators, if you look at the way the InsurTechs have positioned, they complement, they help the insurers basically open up, like I said, new markets, areas, right? Areas where traditional insurers could not reach. They're able to reach with technology advancement. They also help, right, enhance existing business verticals, right? Basically, if you look at Moto, for instance, the example was made of how to easily just onboard yourself, right, with some Curacell products. So it's an enhancement. They are not risk carriers, so they cannot replace the insurance, right? Except they go and get, if they grow too big and go and get an insurance license. But they can't replace the insurance. But if everybody understands the role they are supposed to play and can collaborate effectively, then they complement the entire industry in our drive for inclusion and universal insurance coverage. Thanks.
Great. So I take it that your stand is there's some level of collaboration, and that's speaking from the traditional insurer. I would ask the same question to Deji. Do you share the same views, or are your views slightly different?
I share really the same views with him, that everyone has a role to play. I feel that InsurTechs, at least from the ones I've engaged with, I've seen in the market, I'm not sure they are really interested in even carrying risk. I would say disruption is absolutely necessary. For the few conferences like this that I've been to, it seems like this 1%, 0.3%, 3%, it has been discussion of almost 10 years. So if you know that nothing is really moving in the numbers, it speaks to the fact that disruption is absolutely necessary. But as well, disruption is very, very risky. And if you have the backbone of an insurance company that knows how to manage risk, it's a solid foundation for you to now use InsurTechs as your R&D. The InsurTechs can look into the market, see how to optimize it, see how to improve it, knowing very well that they are partnered with an insurer, that after we finish our little test, we can scale with someone that has the backbone to do it. So I absolutely agree with him that that everyone has their role to play. The insurance company is absolutely very, very, very important. You don't want the InsurTech to be using premiums to be doing experiments, really. So one needs the other, I think. But I believe that disruption is necessary, and as long as we can have that kind of collaborative engagement, yes, both parties can really make a change in the industry.
Great. Thanks for that. Nkiruka, I saw your mic. Want to add to that? Okay.
I just wanted to add that I think it is a good time for us to talk about the trust deficit. When we talk about complementary transformation, which I prefer to use than disruption is now a buzzword. We cannot make the change or the impact that we want to make without trust. And like I said a couple of weeks ago, is it not funny that the industry where trust really matters for what we do is the same industry where amongst the players we don't even trust ourselves? So we all must come to the table, yes, everyone understanding their role that they have to play, but also putting trust on the table that we want to do this for the benefit of everybody. And I still say it, the market is big for everyone to play and still eat well from it.
Great. Uche, on this same topic, finally.
Yeah. So on this same topic, so I think there are two sides of the coin. One is the standalone insurtechs and the partner in insurtech. Now, if you look at the composition, I think we have more of partner in insurtechs. The standalone are still, trying to get more traction and maybe do. But for the partner in insurtechs, I think we've rather come to make, not to disrupt, but to enable, to make that system more seamless, create more customer experience for them, and be able to rekindle the trust factor, which is one major thing that we're lacking in the industry. So that is how I'll put it. Thank you.
Great, thanks. And you jump-started the discussion from a regulatory standpoint, and I think our conversations will probably go a notch higher now, because oftentimes we scratch the surface. But when we look at the peculiarity of our market, we know that there have been insurtech players in this market in the past 5 years. And you heard me rightly when I said CubeCover is probably one of the very first who has come out to really talk about the traction they've made on certain key metrics. The ecosystem and regulation is key to enabling and helping the insurance industry thrive. NIRA was launched a couple of weeks ago. We know we're buzzing around now because we know there is a platform and something that we can hold on to ensure that most of the things that we look up to as objectives that need to be achieved now have an enabling law, basically putting it into action. Uche was speaking about standalone and partnership. So for some of us, you may also have heard that the InsurTech guideline was also released about 2 months ago. And it really focused on 2 areas. One is the fact that you'd have a standalone insurer who would be able to write a certain level of business, excluded from some classes of business. And we also have the partner InsurTech, whereby they would basically partner with insurance companies and the likes. Now, we also are aware that NIA very recently also launched the Innovation Lab. And all of this is coming together in a very nice way to basically say, how do we ensure that within the ambit of regulation, we're still able to do the things that we need to do? One of the complaints that most insurtechs have had before now is that potentially regulation strangulates. And when we say it strangulates, it means that even when you have the best of ideas, provided it's not something that is already on ground, you need to go through a process. I've had my fair share of trying to defend in front of regulators why certain things need to be done in a certain way, and I give kudos to them because really, at the end of the day, it's also about protecting the customer. At the end of the day, we also want to build a viable and sustainable business. But the next set of questions will be focusing on regulation and environment. And, maybe I think I will start with, let me throw it to Nkiruka first to take this. So, how effective do you think the NICOM regulatory sandbox, the guidelines that we have on compulsory insurance enforcement, how do you think this would help to drive adoption?
Thanks. First of all, as I always say at every platform that I have the opportunity to speak, to say that we need to give credit to NICOM, because sometimes when we are moving at a fast pace, we don't pause to appreciate the progress that we've made. Having the NIRA reforms and the InsurTech guidelines out within the time that it did could tell you the amount of work that has gone behind the scene. But I think that there's still a lot of work that needs to be done. I know that a couple of months ago, we were talking about the sandbox system. and we still heard that, yes, Nikon does have a sandbox system, but people are not using it. We need to come back to the table to help the InsurTech players understand how best to manage or work with the sandbox systems. I don't know about everybody else, but almost every InsurTech player has a roadmap to what they're working on. If you have a sandbox system that skews your delivery totally out of what you're planning for, it's hard for you to work with them. So I'd definitely like to implore that we have faster timelines with the sandbox systems to make it effective, because currently nobody's using the sandbox system that we have. I'm looking forward to the innovation lab that has just been launched and to see the outcome that we have from them. On the enforcement part, I truly don't think that with the amount of people that we have in Nigeria, that we can drive enforcement without digitizing it. Such that at the point of purchase, if I'm buying a health insurance, I'm buying a motor insurance or a property insurance, I can validate right then and there that I'm buying a valid policy, rather than go through the bureaucracy of going to someone's office and being exposed to buying fraudulent policies. So I think there's still a long way to go. There's still a lot of work that needs to be done on the sandbox part, and the enforcement, I think, definitely would have to follow through a digital approach to make it work.
Great. So there is still a long way to go, but we have the enabling environments in place. We have the structure that we can ride on in place. Omoshola, I want to throw this question to you. I know AXA has also been involved in a lot of partnerships. Everywhere you go, you just keep hearing AXA, AXA, AXA. And I know at some point you also had some form of innovation lab in code, and basically trying to also foster innovation and ingenuity. How can partnerships between insurtechs, traditional insurers, the fintech, and even the telcos, how can it unlock wider distribution opportunities and trust? How do you think that can work?
Okay, thanks. Very good question. So I think at the end of the day, right, the focus is, for us, is to have very great customer experience. That's for everybody, right, for our customers, right? Now, people have spoken about trust, right? And I think that is one of the major inhibiting factors, right, that we have right now. And to think that we're in an industry where we are preaching, to customers to trust us, right? Again, I'd said that realistically, I'm a very pragmatic person, right? And realistically, when you look at it, right, everybody has a role to play. So if partnerships are going to work, then we must recognize that and accept it. And build frameworks that allows us to work interdependently of each other, right? Growth is basically moving from being dependent to being independent, and then to being interdependent, right? Essentially collaborating, right, in a win-win situation. So establishing those frameworks are very important. Understanding, beginning with the end in mind, understanding where and aligning your goals, right, with all the players that you want to partner with is also very important. And coming to the table and basically putting together the roadmap, all right? It's not a start and finish thing, it's a journey. And everybody must recognize, everybody within the partnership value chain must recognize that and be ready to focus and work together on it. So that framework is very, very important if we are to foster and drive adoption.
Great, thank you. And still talking about partnerships, so this is Deji, and I want you to perhaps maybe share some of your experience. So we're in InsurTech meetings with our colleagues, and we hear people talk about the challenges that they face. And one of the challenges that we have is how we deal with the issue of pricing value within the ecosystem. The ecosystem now will consist, so I'll take telcos, for example. in what you do, I would assume that you would have the telco, you would have the insurer, you would have some form of aggregator. And, you know, in those days, about 10, 12 years ago, the telco wanted to collect about 60% of the premiums. And all of us, you know, at that point, the discussion just collapses. What has changed today? And how have you been able to strike that balance? Because if we're saying that we can indeed have fruitful and beneficial partnerships, one of the key issues that we need to address is how does this become win-win for everyone? For example, I know that in one of the sessions when we're reviewing the guideline, the question came that most insurtechs today come with technology. And part of that work that they do means that sometimes they contribute to onboarding. They take part of the share of distribution as well. They sometimes also contribute to initiating the claims process, but they are only paid either a commission or a percentage that is tied to pretty much most times a broker's commission. And the cry was, how do we create meaningful value for these guys who are bringing so much to the table? So what has your experience been like? And how have you been able to sort of just, you know, create that balance and ensure that it's a win-win situation for everyone?
I think that the problem still exists, really. But from our perspective, we always take the point of view of understanding each stakeholder's position. So sometimes Cube is at the center of, on one side, integrating, let's say, a telco, on the other side, integrating a service provider, on the other side, integrating an insurance company. And one party might say, like you're saying, I want to take the lion's share, right? The way we've been able to handle it is sort of identifying really what responsibilities are each stakeholder bringing. And let's really try and value it, and let's really try and express it. Let me use something in practice now. Just intuitively, if a distribution partner, let's say telco, for example, tells you, I'm going to take 50% of the top of that premium, your natural perspective is, I'm walking away, right? And the telco might look at it and say, okay, I'm going to expose you to 70 million customers. You might ask me tomorrow that I should message all of them. 70 million times 4 naira is 280 million naira. Are you willing to pay for that? Right? So you on the other table might want to value it and say, okay, if this guy is going to give me access to customers and also give me the opportunity to access marketing for free, that's something I might have saved instead of bringing cash out of my pocket. But now, if you look at it from the insurer side, it's saying, okay, but I'm carrying the risk now. If these people would claim, if I don't make enough money, then I will be in trouble. You understand? Now, the telco might look at it and say, you know what? We can guarantee you that we will make money for you in volume. So beyond us having that back and forth of, oh, I want to justify my share, you want to justify my... Once I identify what I'm going to do for you on a guaranteed template, let us estimate that we are going to make this amount of money. On this value, can you provide this service? You understand? And you start to find the balance. All the parties have their responsibilities, right? But then you still have to remember the customer, because it won't be that because the sharing is going left and right, customer pricing will now start going up, right? So within that discussion, you still have to remember that all the stakeholders will get the value or the sharing or the components for what they are really bringing to the table, but all of us collectively need to, at the end of the day, offer the customer a pricing and a product that is market fit. It's a bit complex, but it can be done. We've seen it done multiple times. I think people just need to pay attention to the perspective of the other side of the table, and then we can find a middle ground.
Okay, great, thanks. Uche, because I know you probably would have this issue as well. You're providing service on the claims end and you've deployed technology and all of that, how does this affect you?
Okay, thank you very much. I think for me, most people have asked me this question, Uche, how are you making profit based on what I've deployed? I said, I'm looking like long term. Why do I say that? Insurance companies are price sensitive. Insurance companies are not even charging equitable premium. So what I mean by equitable premium, they're not even charging premium commensurable to the risk exposure they're carrying. There is acquisition cost on that premium, there is reinsurance back end. So any additional cost is not what an insurance company wants to carry. So what you need to look at is a game of numbers. So no matter how little you're taking, once there is traction, you'll be able to make your numbers. But to put costs on the premium for an insurance company is not going to fly. So my business model for me is just a game of numbers. And I'm just taking the barest minimum I can take for now and believe that the numbers will grow. Thank you.
Interesting. Thank you very much. I want to come back to Omoshola. Or maybe before I come to you, let me hear from Nkiruka. Many insurtechs, I think the biggest challenge that most insurtechs face today is the issue of profitability. Some of our colleagues have VCs, who have invested in dollars. And if you look at what has happened to the Naira in the last couple of, maybe in last 18 to 24 months, some people's valuations have just tanked. In fact, some people's revenues have become peanuts. And we keep asking, the big question that comes then is, how do we pivot to something more sustainable? We often use the example of Opay. Opay came into the market as a ride-hailing business. And overnight, regulation changed. And they had the option of either packing their bags and going back to Asia or staying, right? And in a very short period of time, they were able to pretty much pivot into a different model that not only became sustainable, we're told that in the first 3 months, they were writing about $2 billion in terms of transactions on a monthly basis. That has grown now to about 14 billion, and it's still counting. In fact, the past MDC of OPay said to us Nigerians that they have only executed 40% of their playbook, meaning that there is still a lot more that can be done. How do you think, or what models do you think can help us address this Nigerian reality? Because it's a Nigerian reality, let's be honest with ourselves. There are people who are driving embedded, there are people who are going usage-based, there are others who are thinking of premium financing. What do you think, or how best do you think we can determine what would work for us that would bridge this gap and also improve their profitability?
Thanks for that, Kayode. I think that until we agree to have an industry-led educational drive, I think that an embedded model will be what would work. And the beauty of embedded is you just make insurance invisible, pretty much. Invisible, and it's accessible to people. So their everyday life, everyday risk, everyday activity, data, traveling, saying a ticket is embedded. You don't even know that it's there, but it's there. I think that the embedded model is what would actually take us to where we need to get, number one. And then premium financing, we've spoken about that a couple of years ago. We know how bad things are in terms of disposable income for a lot of Nigerians. I think that if we're able to make funds available and customers can buy bit-sized, I think it's also another model that can work. But for me, top price would be embedded models. Embedded.
Great. And of course, with embedded comes the need for education. I'm not sure, Deji, you want to say something? You want to add to that? Okay, great. So, Omoshola, before I come to you, I'm so now we're looking into the future. The future is now, by the way. I heard someone say something very interesting this morning. It says that, she said, if your business is in 2025, then you should start to position it for what it would look like in 2027, right? Which I felt was quite insightful. I remember 11 years ago in Chennai, a couple of us were there for about 2 weeks with about 14 other insurers across Africa. And on that visit, we had a field visit to one of the insurers. And it was interesting to know that as far back as 2014, they had already started geotagging homes that had life insurance. So they do something very similar to what you have Lapo Microfinance do, where they bring people together in clusters, you give them money and all of that. So these guys sort of bring those homes that have been geotagged and put them into like groups, and they usually work with the women, because the women just have some fantastic way of, living out this dream of insurance. And every time they come for those meetings, they show them the heat map based on the geotags. And the women go back home being able to identify the homes that don't have any form of insurance. And they give them a kind of, what I call it, invitation to the next meeting. Similarly, just very recently, I think about a year ago, I was with an insurtech called Turaco, and I was working out of the Ghana office for a couple of weeks. And on this particular trip, we met another insurtech. And these guys were pretty much into parametric insurance. That was all they were doing. And they started to share use cases of what the future that we talk about is today in Ghana. Obviously, we are aware that Ghana has a higher insurance penetration rate than Nigeria. And they gave 2 examples. One is with the farmers in Tamale. And they had developed via an app flood and storm, covers that are triggered by just numbers. So at the point where they signed this agreement, it is stated that when rain falls beyond a certain millimeters or centimeters, it automatically just triggers a claim. You don't have to file any documents, you don't have to do anything. So they can say, we're growing cashew in northern Ghana, specifically in Tamale. In this region, if for any reason the rain falls and falls above 50 centimeters for a period of 24 hours, we will pay that claim. And that's exactly what they did. And they told us that part of the use case going into the future was that they started to use that same technology for events like this, where there may not be a canopy, but it might be an open event where they have spent money to put the event together. And they're saying if for any reason the storm or rains on that particular day of the event goes beyond a certain level, we'll refund or we would pay claims equal to what you have spent in trying to put that event together. And we're starting to see very brilliant ideas coming through. Are you starting to see some use cases in Nigeria driven by the recent NIRA reform that has been put out? And what are your thoughts? So this is going to Omoshola because, of course, what are your thoughts around how the future that we think is 2-3 years away is actually now, and what do you think we should start doing to place ourselves in that map that shows that indeed we are able to almost quantum leap the position that insurtechs are today in terms of the service that they render?
Great question. Many questions in one. Okay, so NIRA is really all about recapitalization and reforms, first and foremost. And the reason why that is so is you can't give what you don't have. first and foremost. And there's a recognition of that. So recapitalization and reform initiatives help essentially the insurers or risk bearers or risk carriers to move up in terms of their digital maturity, because they now have the capital to bring in tech, bring in the best hands, of course deploy tech in a way that can scale and what have you, right? Not so that's what that exercise is all about. It's also it basically fosters and helps us to acknowledge the fact that you need to be ready for what is to come. And the truth is that a lot of traditional insurers, right, are not where they need to be as of today, right? The new entrants, yes, it's easy because they're coming in. There's no baggage. There's no there's no baggage essentially, so they can just build from scratch. But when you have legacy issues, right, you are running a two-track system. You have to keep the lights on. You can't kill your business, and you are building for the future, right? So that future cash flows are assured, right? And so you are building that in parallel, right? And at some point there will be clashes. Some people even have a separate team that does that, right? So that's the foundation. So your foundational systems needs to be in place, first and foremost. There needs to be a recognition that AI, for instance, is here to stay. And the fuel for AI is data. Is data, right? And we've seen fantastic things that are happening. You've spoken about parametric insurance. I mean, I'm privileged to even be in talks with someone that is already working on the future of motor insurance, right, in Nigeria, right? And it's all about data, deploying IoT devices and what have you, right? In vehicles of your customers, collecting data, driving patterns, when the vehicle is stationary, when it's not stationary, and using that to present and offer prices on a periodic basis, shorter periods, right? Shorter frequencies, maybe on a monthly basis, right? That then delivers the kind of value. So it is now risk and activity-based pricing, right? Moving from the traditional tariff-based pricing. And that's where we're all going. That's where we're going. So risk-based, activity-based deliveries, right? And all this is also embedded within product innovation. So first and foremost for me, I think it is paramount that everybody levels up. There's a minimum requirement in terms of digital maturity that has to be reached as a back end, because everybody is depending on you. The regulators are depending on you. The insurtechs, partner insurtechs, are depending on a very stable and strong backbone. So that is important. And the recognition of the fact that AI, right, with big data and all other, it's not going anywhere anytime soon. It's here to stay. You have to, get on the bandwagon as the traditional, or you get left behind. So that's where I sit.
Thank you very much. Before I give our panelists an opportunity to pretty much round up, I want to throw it back to the audience. So I want to open the floor for questions. Based on everything that we've said, are there areas that you want to clarify? Are there questions that you have in mind? Ultimately, the big question is, has InsurTech cracked it? And the truth is, we haven't gotten to that point because that's really what we're going to be using to round off. So, but I want to see if we have questions. Okay, I can see a few hands. There's one at the back, and Odion as well. Any other hand, please? Okay, great. Okay, whilst we're waiting for that question to come, maybe I should just, throw this open to everyone. So what lessons from other emerging markets do you think would help accelerate Nigeria's adoption curve? Do you have examples from markets that you want to share? Yeah, and I'll leave the floor open pending the time.
Our mic is working now, so we can get our question going.
Hold that thought, please. Hold that thought. Yes.
Okay, good afternoon, or good evening. Amazing conversations so far today. My name is Peace from Has Insurance. So I'd like to know if there's any forum that brings together the insurtech companies, the current players today, for them to discuss. I know a lot of initiatives are happening, some of them driven by NIA, NICOM, and the insurtech companies themselves also have fantastic ideas. So is there any forum that brings them together to discuss, to just have a roadmap? You know, because a lot of things we're talking about today are things we know will drive the conversation, like data. So what are the things that are happening? We rely on them so much to bring in a lot of innovation that will drive this thing, but the conversation doesn't seem to be moving. I'm not seeing that much collaboration yet that will help us to scale. It just seems like everyone have their solutions individually or independently, and that's not really giving us the kind of traction that we're hoping to get. Thank you. So I want to find out if there's any kind of...
I think, Nkiru, you want to take that?
Yes, so we are building a community. We have a community, the insurtech players, that has now become a space where we can conveniently speak about some of the issues that we have and just brainstorm within ourselves. We've also seen a couple of roundtable conversations that we have on a quarterly basis, where we come and we also talk about these issues. So it's a very new initiative, but yeah, the community is being built currently.
Can I speak to
Deji.
Okay. There's one of them here right now, Mr. Damola Oloko. He has, I think he's the convener of the insurtech.
Let's put our hands together for Damola.
He's the convener of the insurtech business series and insurtech business forum. I can't speak better on it than you yourself. But he actually convenes from time to time a lot of insurtech clients, providers, etc., and brings us all into one space to sort of discuss, share ideas, and try and progress. He's right here. So in case you want to engage him, I think it's a very fantastic forum to be in.
Yes, and thank you very much. I think it was rightly said. Not only do we have the insurtech business series, we also have 2 WhatsApp groups. One of the WhatsApp groups also has representatives from NICOM, including our own deputy commissioner. And there are conversations that are going on from time to time on those platforms. And I think once in a while, we also have physical meets as well. So yes, very early days, but it's moving in the direction that we're hoping that would transcend into something much bigger. So back to the question I asked earlier on, maybe 1 or 2 examples of emerging trends that we've seen that we think can readily become plug and play. I hold the view, and maybe that's why I speak this way, I hold the view that our market is so large that no insurance company or insurtech player should look at themselves as king. We have to start to move from the basis of competition to embracing the concept of co-opetition, where we collaborate with our strengths and make up for others' weaknesses and bring to the market a viable proposition that is acceptable to the populace, starting with the mass market. So when I ask about these examples, we try to be as open as possible about what it is that we're doing, because the ideas come from people who are seated here. There is no need for us to try and hoard anything. We are not scratching it yet. I don't want to answer that question because I'm still going to throw it to my team members, but the panelists. But yes, what examples can you share from what has happened in other climes that has really, taken off and really been very successful? Uche.
Okay, so you mentioned Ghana, but do you know what happened before that whole innovation you saw? Okay, so way back in Ghana, sometime 2017, we realized as insurance companies, we do not have capacity for the agri insurance. So we decided to say, okay, let us form what you call the Ghana Insurance Agri Pool. So every insurance company subscribed, and we were we, the CEOs, so we elected 5 CEOs, which I was among. So I was actually chairing the Ghana Insurance Agri Pool. So we drew capacity among ourselves, put in the pool, and we sourced for help from multinationals, foreign aid, from like GIZ and the likes of them. They gave us money. We were able to run the pool. We literally subsidized premium for the farmers. And that was where agri insurance started. That scaled up to what you saw in Ghana. So we drew capacity from ourselves because we knew at one single company, we did not even have a reinsurance line, neither did we have capacity. So we called ourselves together and we drew capacity for ourselves. That is the innovation you are seeing that is in Ghana today. Thank you. So that's one example.
Interesting. Anyone else?
It's funny that you mentioned Ghana because I was also going to talk about Ghana. Our subsidiary business in Ghana, for example, Ayo Ghana, that business has grown on the back of one of our foremost products, which is the Recharge with Care. And the Recharge with Care is sold on the back of airtime recharge. I think that if we're able to draw lessons from that, of course, we do have regulatory constraints here in Nigeria, which is why we can't do it. But we've seen that market exponentially provide insurance to everyone who has a mobile number who recharges on a daily basis or on a weekly basis. And the numbers are astronomical. I think it's one key thing that, we're hoping that we can break through in Nigeria. Then, beautiful thing with Kenya and the telco-led microinsurance product that's also going there. I think that those are 2 key markets that are quite interesting for us.
Great. This session really focuses on the theme, Has Insurtech cracked it? And I know that there are several players here. I want to give you a couple of minutes to try and answer that question by looping it with another question, which would make it a bit easier for you to then postulate. So, 5 years from now, what should the Nigerian insurance landscape look like if the insurtech's potential is fully realized? How will it have transformed not just the industry, but the lives of ordinary Nigerians? Who wants to go first? Okay.
I think that, so to answer the first question, has Insurtech cracked it? I would say that we are cracking it. I won't say we've cracked it openly, I'd say we're cracking it. Because for me, in 5 years' time, the biggest outcome that I'd love to see is that customers, consumers can buy insurance as easy as you can buy airtime. You can make a claim and you believe that your claim will be paid. If we're able to solve for those 2 things, affordability, accessibility, and the trust that every claim that comes through will be attended to or will be paid, or you would know what's going on with your claim, because there's also the big conversation around transparency of claims that people don't always talk about. I believe that in 5 years' time, if Insurtech are actually able to crack it open, we will find ourselves in a situation where you don't need to cajole anyone to buy insurance. They buy insurance as easy as they can buy airtime.
Thank you. Deji, your take.
Yes, I agree with her that Insurtech is cracking it. I'm also from the school of thought of incremental innovation. So sometimes we need to look within ourselves to understand how we're going to get to where we are and even have the patience within us. I'll give you an example. If they say Alexander Graham Bell created a mobile a landline and it was with wires, it means only few people had phones as of when it started, right? And then after some time, someone created now a mobile phone. And because of the capacity for you to be mobile, then you had more people that would be able to now use the phone. And on top of that, people started putting pictures. On top of that, people started putting even things like Instagram and Snapchat that people run on those devices. But originally, the initial investment was one landline since the back. It means that so far as the InsurTech is moving in the right direction and creating value, InsurTech that we say is cracking it now will eventually crack it. It just sometimes needs time. As well, sometimes if capital comes in, you might try to accelerate the cracking. But you said something maybe 2 questions ago that sometimes someone will bring in VC fund, and if the VC fund gone because of the scaling and the speed, it will actually collapse the direction. So to wrap that up, yes, InsurTech is cracking it. We need to understand how to innovate and improve incrementally, and give it enough time. It's going to get there. I don't know if I remember the second question.
I think you've put together both. Let's take Omoshola. Thank you for that.
Okay, so I'd said before that we have moved from being an era of pessimism to optimism. So we're a bit more optimistic now, right? That shift alone tells a story, right? So I think they've painted it in a different way that we are cracking it. So, you know, if we're able to move, right, it tells a story. It means that there's a side of the entire journey that has been, you know, shrouded in mysticism. I mean, it's been mystic for a long time. The advent of the InsurTech sub-industry has kind of opened it up. I mean, before now, you wouldn't hear, you know, number of customers in the insurance industry in their millions. It's never more than in the thousands, and if you're even in thousands, you're a good player, you know. But now it's common talk to hear, oh, we have 2 million customers now. 2 million. It's only made possible because of the reach, the distribution channels that have now been provided by the various business models that InsurTechs have come. So yes, there's a cracking of it that has started to happen. However, I think the InsurTechs needs to be very careful, right, that they don't get, you know, ahead of themselves. Insurance is very, very delicate, and it can be very sensitive. So from 3 perspectives, number 1, education, right? A lot of things that they're doing right now, people don't know. They may see it as value, we don't see it as value. There's no value in selling insurance that the person buying the insurance doesn't know that he has insurance. For us, right? We want them to know, so that when they are aware that there's insurance in place, so that when the risk crystallizes, they are aware that they have to claim. Right? A lot of InsurTechs I think, are still a bit oblivious to this, right? So it's a dangerous double-edged sword, if you don't mind, and it can, depending on the business model, it can easily, you know, collapse as easily as quickly as it arose. So there needs to be some investment in education, because the InsurTechs are now, you know, kind of taking the role of being the front player, being closer to the customer, right? And if that's where you are, then you must also take up the role of educating the customer about insurance. Very, very key.
Great. Right. Thank you very much. Uche, finally, from you.
Okay, thank you. So I think the InsurTech is an emerging market space. We're yet to reach our full potential. If you look at the new insurance reforms, in as much as the regulators has increased the capital, they've also tried to put guidelines to try to encourage insurance companies to digitalize their process, embrace technology. Because what they're trying to tell you that you're going to take capital from your shareholders, but also these are revenues that will help scale you up. So if insurance companies will embrace InsurTech, then we can be looking at reaching our full potentials in that 5 years. Thank you.
Great, thank you very much. And on that note, I want to say thank you to everyone. If I summarize everything that we've heard, we can leave here saying, 1, InsurTechs in Nigeria are cracking it, right? We have seen a need for standardization. Education is part of the foundation that we need to embrace. more importantly, trust between collaborators becomes very essential. And we're not able to potentially put a number to what can happen in this market. We have over 100 million young people. We had quite a number of people on the other side, and information getting to me was the fact that some of them are not even aware that they need these things. And so you can imagine when you extrapolate that number, there is a lot of education that needs to go down. But I think that this is a market that is open. The potential is huge. And I believe we have players who have what it takes to be able to take insurance in collaboration with the regulatory authorities who have put the guardrails in place to greater heights. So once again, thank you very much, audience, for your time. And thank you, panelists, for such an engaging session. God bless you. Thanks.
Thank you.